Dividends! Ka-ching! Your mailbox money machine. Alright, listen up folks, we're talking dividends today. Dividends! That's free money, people. It's like the company is saying, hey, thanks for owning our stock, here's some cash. Booyah! This isn't just chump change we're talking about, this is serious wealth-building power. It's the cornerstone of a rock-solid portfolio. You want income? You want stability? You want companies that treat you right? Then you want dividends, my friends. It's the sound of your portfolio working for you. Think about it. While Wall Street is going nuts, up and down like a yo-yo, those dividend checks keep rolling in. Ka-ching! It's like getting paid to wait. Patience pays, especially when it comes with a quarterly cash deposit. This isn't some Wall Street voodoo, it's simple math. Companies that make money, real profits, they can afford to share the wealth, and share they do. This is how the smart money plays the game. They're not just chasing hot stocks, they're building income streams. Now why are these payouts so important? I'll tell you why. They are a sign of a company's health. A strong, stable company. A company that isn't afraid to show its shareholders some love. These aren't speculative bets, people. These are often established businesses with real earnings. They're not just promising future glory, they're delivering present-day cash. This is what separates the contenders from the pretenders. It's a signal, a green light. And let me tell you, in a choppy market, dividends are your best friend. They're your anchor in the storm. While other stocks might be sinking, your dividend payers are still pumping out that cash. It smooths out the ride, it gives you peace of mind. It's that steady drip, drip, drip of income that can make all the difference. Imagine getting a raise every year just for holding a stock. That's the power of dividend growth stocks. Don't just sit there, get in the game. Altria, the smoke and the sizzle. So, what's the ticker we're zooming in on today? It's MO, Altria Group. Yeah, that Altria. This isn't some small fry operation, folks. This is a titan, a behemoth in the consumer staples world. They've been around the block. They know how to make money. They know how to navigate tricky waters. We're talking about a company with deep roots and a massive market presence. You can't ignore a player this big. They're a household name for a reason. Now, Altria is primarily known for its tobacco products in the US Marlboro, Skoal, Copenhagen. These are monster brands. Love them or hate them, they generate enormous cash flow. And cash flow, my friends, is what fuels those beautiful dividends we just talked about. But MO isn't just sitting on its laurels, puffing away on past successes. No, sir. They are looking to the future. They're investing in smoke-free alternatives. They're adapting, they're evolving. That's what smart companies do. What makes Altria a fascinating player right now? Well, it's that blend of old-school cash generation and new-school innovation. They're trying to pivot. They're trying to find that next big thing while still raking in the dough from their traditional businesses. It's a balancing act for sure, but it's one that could pay off huge for investors who understand the long game. This isn't about tomorrow's headline, it's about next decade's portfolio. As of my look today, May 27, 2025, Missouri continues to be a stock that income investors watch closely. Its valuation often reflects the unique challenges and opportunities it faces. You gotta look at the price, you gotta look at the yield, you gotta look at the whole picture. Is it a screaming buy? That depends on your homework. But is it interesting? Absolutely. The numbers often tell a compelling story, especially for those hungry for yield in a world that's starving for it. Decades of dollars. Alright, let's talk about the main event with MO, the dividend. This isn't just any dividend, people. This is a legendary dividend. We're talking about a company that has been rewarding its shareholders with cold hard cash for decades. Decades! That's not a typo. They have a track record that most companies can only dream of. This is consistency you can bank on, or at least, consistency you can seriously consider for your income portfolio. It's a beautiful thing. And it's not just that they pay a dividend, oh no! Altria has a history of increasing that dividend. Year after year they often bump it up. Think about that. More money in your pocket just for holding the stock. That's the kind of action I love to see. It shows management's confidence in the business. It shows they're committed to returning value to shareholders. This isn't just a promise, it's a pattern. A beautiful, money-making pattern. Booyah! So what kind of yield are we talking about? Typically, Missouri boasts a dividend yield that makes other stocks blush. It's often significantly higher than the S&P 500 average. That means more bang for your buck, more cash flow, more power to reinvest or spend as you please. This is what income investing is all about, finding those juicy yields from companies that can sustain them. And MO has been delivering that juicy yield for a long, long time. Why does this history of dividend payments matter so much? Because it's a testament to the company's financial discipline and its dedication to its investors. It tells you this isn't a company that plays fast and loose with its cash. They prioritize that dividend. They understand its importance to a huge chunk of their shareholder base. When you see a company with a multi-decade streak of dividend increases, you sit up and pay attention. That's a dividend aristocrat in spirit, if not always by strict index rules. Genius move or risky rumba? So you're looking for income, right? You want stocks that pay you. MO, with its hefty dividend, screams, "Look at me!" For dividend seekers, this stock is often front and center. That consistent payout, that high yield, it's like a magnet for investors who crave regular cash flow. Imagine that dividend check hitting your account every quarter. It could help pay bills. It could be reinvested to buy more shares, compounding your wealth. That's the dream. Let's make it real. Say you bought MO shares. Every 3 months, like clockwork, a deposit appears. Maybe it's enough to cover your streaming subscriptions. Maybe it's your fun money for the weekend. Or if you're playing the long game, you reinvest it, buying more MO, which then pays you even more dividends next time. That's the snowball effect. That's how you build serious wealth over time, folks. It's not rocket science, it's dividend discipline. But hold your horses, it's not all sunshine and rainbows. No way. Investing in MO comes with risks. You gotta know them. The biggest one? The decline in smoking rates. That's a headwind, a big one. Then there's regulation. The government can always throw a wrench in the works. And public perception. These are real factors you cannot ignore. So, while that dividend is tempting, you need to weigh the risks. Always do your homework. So, is MO a slam dunk for dividend investors? For those focused purely on a high, historically reliable income stream, Missouri is incredibly compelling. The company has proven its commitment to that dividend. However, you must acknowledge the industry's challenges. The stock price can be volatile. It's a balancing act. If you understand the risks and are comfortable with them, Missouri can be a powerful income generator for your portfolio. But go in with your eyes wide open. Booyah!